Have you ever been stuck in that security line at the airport, shoes off, belt in hand, just watching the chaos?
Oh, yeah. Total survival mode.
Exactly. You see the duty-free lights flashing, people sprinting to their gates, the smell of very expensive coffee,
Mm.
and you're just thinking, I just want to get on the plane.
That's all you're focused on.
But if you flip a switch in your brain just for a second to investor mode, all that chaos starts to look, well, very different. You realize you're standing inside a monopoly.
A captive audience.
Totally. You are in a massive shopping mall where the landlord takes a cut of absolutely everything. The coffee, the perfume, the parking. And, oh yeah, they also park airplanes out back.
It is a cash-generating machine if it's run well.
Welcome! Today we are popping the hood on that machine. We've got the consolidated financial statements and the independent audit report for TAV Airport's holding for the year ending December 31st, 2025.
And there's a lot to get through. This report was approved by their board on February 17th, 2026, and it tells a fascinating story. Revenue's way up, but the bottom line, the net profit, well, it nosedived.
It's a classic case of needing to read past the headlines, isn't it?
Absolutely.
So that's our mission today. We're going to decode these hundreds of pages for you and see if TAV is actually cruising at altitude or if there's some serious turbulence in the financials that the average investor might miss.
And trust me, there's turbulence hidden in those footnotes. Let's get into it.
Let's first get to know the company a little.
Good idea, because TAV isn't just, the Istanbul Airport company.
Yeah.
They don't even run the main Istanbul airport anymore.
Yeah.
TAV Airports Holding is a global player, headquartered in Maslak, Istanbul. They build and operate airports.
And global is not an exaggeration. I was looking at their footprint. Domestically, sure, you've got Ankara, Esenbosa, Izmir, Bodrum.
Big tourist spots.
All right. And a joint venture in Antalya. But then, internationally,
Wow.
they're in Kazakhstan with Almaty, which is a huge deal we need to talk about.
Well, a very big deal.
Georgia, Tunisia, Macedonia, Saudi Arabia with the Medina airport, even Riga and Latvia. They're all over the place.
It's a really diversified portfolio.
Yeah.
But the really clever part isn't just where they are, it's what they do there. They've built this whole vertical ecosystem.
That's what I saw. It's not just about landing fees. They want every single euro a passenger is willing to spend.
Exactly. It's called value capture.
I mean, they've got A2 for the duty-free shops, BTA for food and drinks, so that cakes and bake sandwich, that's their money. Hava Joan does the ground handling, and they even have their own IT firm, TAV Technologies. It's all connected.
It is. So by the time you've parked, checked in, bought a coffee, and grabbed a gift, you've probably paid TAV 4 or 5 times before you even get to the gate. And they have, about 21,500 people keeping that whole machine running?
That is a small city. Now, I saw in the notes the shareholder structure is pretty complex, mentions entities like Tank, OWA, Alpha GmbH.
Yeah, that's basically Aeroports de Paris, ADP. It just shows they're part of a big, sophisticated global network. But for you, the listener, the key thing isn't who owns the shares, but what the company itself actually owns.
And this is where it gets weird. They operate under service concession arrangements. So what does that mean? They don't own the airports?
No, they don't. This is the single most important thing to understand about TAV.
Right.
They are not a real estate company. They don't own the land. They don't own the buildings.
So what do they own?
Time. They own time. Think of it like this. You lease a rundown house for 25 years. The deal is you have to fix it up, new kitchen, new roof. In return, the government, who owns the house, lets you keep all the rent from anyone you sublet to.
Okay, I'm with you.
But when that 25-year clock hits 0, you hand the keys back. You walk away. You don't own the bricks. You just own the right to make money from it for a set period.
Wow. Okay, so you own the clock, and that clock is always ticking.
Always ticking down. Which leads us right into a quick SWOT analysis. Strength is clear, they're diversified across countries and currencies, and that integrated model is fantastic for margins.
And for opportunities.
Growth. They just extended the Ankara-Esenbosa concession to 2050. That's a huge reset on the clock. And Almaty in Kazakhstan is a massive growth engine.
Okay, but weaknesses must be.
Debt. Piles of it.
Yeah.
To get those long leases, you have to pay enormous fees up front, which means borrowing billions.
And the threat.
Geopolitics, pandemics, anything that stops people from flying. The revenue can disappear overnight, but those debt payments don't. And as we see all over this report, inflation.
The famous TMS 29, it's everywhere.
That makes the numbers very, very noisy.
Now we can move on to our analysis.
All right, let's dig in. And a quick note, this report is in Turkish Lira, and it's adjusted for hyperinflation, which is what TMS 29 is. But functionally, TAV operates in euros. their fees, their duty-free prices. It's all in euros. So we'll use the lira figures from the report, but you should really be thinking of this as a euro business.
Got it. Okay, let's start at the top. Revenue. In 2024, it was about 59.2 billion lira. In 2025, it jumped to 82.15 billion lira. That's a huge spike.
It is. And it's not just inflation. That's real growth. It tells you travel demand is back with a vengeance. People are flying, and they're spending money in the terminals.
You can see that in the gross profit, too. It went from about 21.5 billion to over 33.1 billion lira. So the core business, running the airports, is just printing cash.
The machine is working beautifully. If you stop reading there, you'd think this is the best year ever.
But, and this is a huge but, I scrolled down to net profit, and I actually had to read it twice.
I know the feeling.
In 2024, the parent company's net profit was 6.56 billion lira. In 2025, after making 23 billion more in revenue, the net profit plummeted to 2.83 billion lira.
It was more than cut in half.
How? I mean, how is that possible? You have a blockbuster year for sales and your profit just collapses.
And that is the billion-dollar question. This is the aha moment. The answer is below the operating line. TAV got slammed by two things: finance expenses and all the weirdness from inflation accounting.
Okay, break down the finance expenses for me.
It's the cost of their debt. Yeah. In 2024, it was about 7.2 billion lira. In 2025, it exploded to 10.9 billion lira.
Wow.
They have a lot of debt, around 59 billion lira of it, and a lot of it is floating rate. So as global interest rates go up, their payments just balloon.
So almost 11 billion lira just went straight to the bankers.
Poof, gone. That's a 30-year growth profit right there. But the second hit is that inflation accounting, TMS 29.
Right.
The report says cumulative inflation was 211% over 3 years. The accounting rules to deal with that are complex. You get hit with things called monetary loss and massive deferred tax expenses. It heavily distorts the final net profit number.
So are you saying the net profit number is kind of fake?
I wouldn't say fake, but it's very noisy.
Uh-huh.
Doesn't really tell you how the actual business did. It tells you more about the macroeconomic storm it's in. For the real story, you have to ignore net profit and look at cash flow.
Okay, I'm flipping to the cash flow statement. Here it is. Net cash generated from operating activities.
What's the number?
It's 15.53 billion lira, up from 11.2 billion in 2024.
There you go. That's your answer. While the accounting profit was cut in half, the actual cash that hit their bank account from running the business went up by almost 40%.
That is a massive difference.
It's everything. For a company like this, cash is king. You pay down your debt with cash, not accounting profit. That 15.5 billion in cash proves the core business is incredibly healthy. The EPS drop from 18 lira to under 8 looks terrifying on a stock screener, but the cash flow tells the real, much healthier story.
Okay, so the cash register is overflowing. But where are they spending it? I see the investing activities line, and they spent about 3.5 billion lira there.
Right, they're not just sitting on it. They're reinvesting, and they're doing it aggressively. Look at the Ankara-Izmir deal. They locked up the rights to operate it until 2050.
A huge deal.
A huge deal, but it cost them. To get it, they had to prepay 25% of the total rent. That was 118 million euros they paid up front.
They prepaid the rent for decades.
A quarter of it, yeah. That's how you lock up these assets. They use their cash flow to buy more time on the clock, locking out any competitors. No one can touch Ankara's operations until 2050 now.
And what about Almaty in Kazakhstan?
That's the other big story. They now own 85% of it, and that's their growth engine. The Turkish airports are mature, they're steady. Almaty is in a booming emerging market. It's a strategic masterpiece.
How so?
It's a hedge. If the Turkish economy has problems, Almaty is earning in different currencies. If Mediterranean tourism dips, Almaty is a key cargo hub between China and Europe. It completely diversifies their risk.
I want to go back to the balance sheet because the asset number jumped out at me. It went from 259 billion lira to 363 billion. That's a 100 billion lira jump. Did they secretly buy a country?
No. That's TMS 29 again. It's the inflation accounting. Think about it. If your house is worth 1 million and inflation is 100%, next year your house is priced at 2 million. You didn't build an extension, the money's just worth less. Most of that 100 billion jump is just them revaluing their existing assets, their concession rights, to today's lira value.
That's so important for an investor to understand. The company looks 40% bigger on paper, but it's physically the same size. It just got repriced.
Exactly. It's just accounting gymnastics to keep the books balanced in a high inflation world.
So looking at the segments, terminal operations is obviously the biggest driver at 55 billion lira. But I was really surprised by ground handling.
Havash, yeah, it's a beast.
It brought in almost 30 billion lira.
Havash is the unsung hero. Every single plane needs ground handling. It doesn't matter if the plane is full or half empty, you still have to pay for the stairs, the baggage carts, the de-icing. It's an incredibly reliable revenue stream.
And what about duty-free, too?
That's the high-margin gem. It's accounted for differently, but it's basically pure profit. Selling luxury goods to bored travelers with time to kill is a pretty great business model.
Bored travelers with foreign currency.
The perfect customer.
So, looking at what management is saying, what's the plan for the future?
It seems to be all about optimization. They're actively managing the portfolio. They're selling down their stake in the Medina airport, but buying more of Almaty.
So they're trading stability for growth.
That's a good way to put it. They're swapping a mature asset for a high-growth one. They know they can't just stand still.
What?
It's that melting ice cube problem we talked about. Every single day, their concession contracts get 1 day shorter. If they do nothing, eventually the clock runs out and the company is worthless. They have to keep finding new airports and extending old contracts just to survive.
It sounds like they're on a treadmill. They have to keep running just to stay in the same place.
That is the fundamental tension of this business. And with debt being so expensive right now, running on that treadmill is getting harder.
Which brings us to the human side of things. They talk a lot about service, lounges, fast-track security.
Because that's where the pure profit is. They can't control the airline ticket price, but they can control the price of lounge access. And people will pay 50 euros to escape the chaos we talked about at the beginning.
I'm guilty. I pay for it.
We all do. We're paying for a moment of sanity. It's a high-margin product.
Okay, so let's try and wrap this all up. TAV is a giant infrastructure play. Revenue is taking off up to 82 billion lira. But they're carrying some very heavy baggage. Nearly 11 billion in finance costs and the wild effects of inflation, which crushed the net profit number for 2025.
That's the headline, for sure. But the real story for an investor is the cash flow. Generating 15.5 billion lira in cash from operations is incredibly strong. It proves the model works. This is a bet on the recovery of global travel and that whole service ecosystem.
But there is that one provocative thought we should leave everyone with.
The clock. It always comes back to the clock. We see these huge assets, 363 billion liras worth. But remember, they don't own them forever. They are time limited. So with debt costs rising and those concession clocks ticking down, the real question is today's cash flow strong enough to buy the next big airport before the current ones expire?
So you're not just investing in a company, you're investing in a race against time.
That is the bet you are making.
We really hope this helps you make sense of what is a very complex report. Once you see the moving parts, it's a fascinating business. If you found this breakdown useful, please hit that like button. It really does help the channel.
And of course, please subscribe so you don't miss our next deep dive. We've got some very interesting companies lined up.
And if you'd like to support us directly so we can keep making these analyses, please consider looking at our membership options. Or if this episode gave you that aha moment, you can always use the super thanks feature right below.
Any support is hugely appreciated and keeps the research going.
Thanks for listening and safe travels.